Hey, how's it going, everyone? Today is October 20th. I am here with my awesome co-host, Boomer, once again. And today we're going to be kind of focusing the show a little bit more than trying to cover every story in the book. We're going to talk about this Bitcoin ETF fake out moment we kind of had to start the week off and some of the things that kind of came after it, specifically from BlackRock and Larry Fink, and what that kind of means for the Bitcoin space, if it means anything. But then we're going to dive into inflation and the nature of inflation and this growing idea that essentially all the calculations and the methodology of how inflation is done is really losing touch with the reality of the situation on the ground. And it's growing to a fever pitch where people are saying, why are they telling me it's 2, 3, 4% when I'm seeing 70% year over year in certain things? And so we're going to dive into specifically where we see that disconnection happening and maybe some ideas on how to better measure it. But yeah, how you doing, Boomer?
Doing great. Nice to see you again. Crazy week, right? Like
Crazy week, man.
crazy week.
Bad times if you are Cointelegraph. Hey, so they came out and they announced really quick on the headlines. And the surprising thing about all this is that Bloomberg picked it up, Reuters picked it up. This headline with no source that said Bitcoin BlackRock spot ETF approved. And I'll dive really quick into the chart.
I heard it was like somebody posted that on some Bloomberg terminal somewhere and just screenshotted it.
Yeah.
And that got picked up. I don't know if that's been verified or not.
I mean, you can kind of see it in the chart, but not really. This little spike here where it goes from 27,700 to 30K in about a couple minutes here. Monday morning. And then as people kind of sit and realize, hold on, like it's not on the SEC website, it just retraces back down. But surprisingly, I think it was kind of the wake-up call that the market needed to know that this thing is coming.
Yeah. And for those of you who are not really all that used to looking at candle charts like this, when you see a wick like that, when you see like a line up or a line down that's really thin, that really just means that it kind of went up and went straight back down. So it didn't stay. It didn't stay at that time
period. Yeah. Essentially, each candle represents an hour, and then on this chart at least, and then within 1 hour, it kind of retraced completely. But the surprising thing about all this is, I've seen a lot of fake headlines that have driven Bitcoin or other crypto prices in the day. And you'll see something similar to this where quick initial pump. And then when they realize the headline's fake, I've seen ones for altcoins like Google sponsors Matic or something like that, right? The thing will retrace. What you'll usually see is that because a whole bunch of leveraged long positions get initiated on the way up, it's a race to the exit when they realize the news is fake. And so what you really see normally after something like this is a retrace lower. Because of all of the longs that kind of have to puke out their positions because of the leverage. And so I can't, tell you the story behind every market movement, but to see basically this move get retraced, kind of grind higher. And we actually broke the previous high today by a little bit, and we're still seemingly grinding higher is something a little bit different, I would say. And to me, what that basically says is that the market woke up to the fact that, this headline was fake, but all of these are in the woodworks. And, there's all these chips in our favor, the SEC, not really appealing the grayscale ruling, all these amendments being made to the ETF applications, which are making them look like they're kind of progressing a little bit. Maybe we should start establishing some Bitcoin positions when we still can, right?
It definitely seems like there's some pent up demand for sure, right?
A little bit, not a lot of supply.
And not a lot of supply. So the market is waiting for a reason to go higher. That's what it looks like. It looks like to me. Doesn't mean it will. Doesn't necessarily. Might not this week. It might not next month. But it definitely seems like there is some desire for things to get a little bit volatile out there.
100%. And like we've talked about on this show, would we buy the Bitcoin ETF? Yes, no, because you don't own your keys. But a lot of people are in the boat where they can't really control keys in a multi-sig if they're buying on behalf of an institution. So again, this product, when it comes out, will have a ton of demand. We know that when they inevitably do push it out into the public, it will be multiple products at the same time, and you'll get this fever pitch of like Fidelity, BlackRock, whatever the other ones are, all kind of competing for, hey, buy my ETF. I got better fees here. I got better fees here. I've got a better custodian, this, that, right? And I've always been bullish on that, just because that means that eventually they're going to need to recruit some of us handy dandy creators to do the messaging on their behalf. But
Yep, creators and analysts. So for sure, it's
exactly,
definitely.
we're all getting girlfriends and jobs.
Let's hope so.
But one of the things that I think went a little underreported this week was, oh, never mind. It got 1.2 million views, but only 2,000 likes on Facebook. I'll show you this clip here. 1 second. Whoop. This is a clip of Larry Fink, CEO of BlackRock, talking
And that was
about
on the same day. That was like
on the
later on in
same
the
day.
the same day that the kind of the fake news came out.
Yeah, so I'll play the clip here real quick.
This rally is way beyond the rumor. I think the rally today is about a flight to quality, with all the, all the issues around the Israeli war now, global terrorism. And I think there's more people running into a flight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
So
That's
the
huge.
man only had to say
Huge.
flight to quality 3 times to get his point across. But that is, I mean, we know what a tonal shift that is. It was 3 or 4 years ago. He was saying, it's only used by drug users. There's no demand on behalf of our clients. To flight to quality, flight to quality, flight to quality, amidst
And
all the chaos going on.
When he's talking about crypto here, he's actually talking about Bitcoin.
Mm-hmm.
Because there is no flight to quality investing in ape coins or Doge coins. No, he's clearly talking about Bitcoin, but he can't say that because he does have an application pending with the SEC. So he cannot sit out there and say, oh, Bitcoin is a flight to quality.
I think he probably can. He just doesn't want to go down that rabbit hole of having to dispute it. Like, it's a public good, I would guess, or commodity, right? Like, if he had an oil ETF and application, I'm sure he could say the word oil. Or gold, right? I don't know. I think it's a little bit of a...
still out. With the application still out now, once it's already out there and it's being bought and sold, that's a different story. But
he'll get into the specifics. But I mean, we all know, like, even the crypto people know that crypto is not a flight to safety.
Of course,
it's speculative on whatever X thing is next for whatever utility. Like, even the crypto people are getting a little bit more honest that none of what they're building is meant to displace Bitcoin. They just want to do their own thing and do something else. I think some of the Ethereum people still think that Ethereum can replace Bitcoin, but they're high on fumes, in my opinion.
I agree. I mean, flight to quality for sure, but I also think it's a flight away from bonds. Bonds have traditionally been the safe store, where the safety goes, right? When there's chaos in the market, people sell off their stocks and they buy gold and bonds. Well, bond yields continue to go higher and higher and higher. And when bond yields go up, that means that bond prices are going down. So despite all the chaotic stuff that's happening in the world right now, we are not seeing a flight into bonds.
No.
No. And I think
I got a great chart for you actually on this. This is Bitcoin denominated in US Treasury bonds.
Yeah, I saw that one.
So it basically looks just like the regular Bitcoin chart, but about one leg ahead.
Yep.
Right? Like we're about here in the US dollar range, but for treasuries, which have just gotten thwomped in the last year. There you go.
Where Bitcoin is up, what, 65-70%?
Larry Fink says it's like a flight to quality, treasuries and gold and all that too, but I don't know about treasuries.
I mean, maybe on the short term, a little bit, short-term treasuries, but on the long end of the yields, on the later dated yield, 30-year bonds, the yields going up. They're selling off.
Yeah, it's going up forever, Laura.
Going up forever,
or for a while.
Yeah. I mean, it's good. This is good to see. I mean, I agree with you. Like, if you're interested in Bitcoin, learn how to hold your own keys, learn how to take self-custody of your own Bitcoin, if that's what you choose to do. But that being said, I do think that a Bitcoin ETF will open up the market for a lot of people. We saw it here in Canada. We're both Canadian. We've had Canadian spot Bitcoin ETFs available for us for about 2.5 years, maybe 3 years now. And we did see quite an inflow, and we're minuscule compared to the US market, right? And we saw a pretty dramatic inflow into these ETFs when the Canadian ones were launched. I know that Australia has one as well, and I think Germany.
I was thinking about this too. I wish I brought the stats for this up, but I've done this before where I've compared Canada's uptake of the ETFs compared to what America's could be. And I've just extrapolated it like, okay, we have 40 million people and, 50,000 Bitcoin across all the Canadian ETFs. And America's got 300 million. But one factor I wasn't really considering is kind of the tendencies to involve oneself in the stock market as a Canadian versus an American. And I don't know if there's a big difference. If, I think in America, I read something like 50% of Americans are in the stock market.
Where
I don't
it
know
would
if
be
it's the same
lower
in
in
Canada.
Canada. Yeah.
You think it's
I
more or
agree.
less?
I agree with you on that. Like, I think it would be lower in Canada. But that being said,
Because we're
I
all in
think
housing.
we probably have more institutional buying, pension funds probably on a per person basis probably are buying more in Canada than in the US. I don't think it's a direct. I mean, our population has gone up quite a bit recently, but I used to just multiply it by 10, right? I used to say like Canada
No,
is like 1/10 the population. It's not quite anymore. So if you're saying 50,000 coins went into the Canadian ETFs when they were launched, that's 500,000 coins. If we go by times 10, like that's a significant amount of Bitcoin.
GBTC I think has around 500,000 coins.
A little bit more, yeah. I think they're a little bit more. I think I'm in the 600 range. And
There
there's
will be
also non-Americans that participate in the American stock market, right?
Yes, 100%, and that's not really being factored in as well, right?
Exactly. So Canadians, I'm sure there are many people out there who are investing in the Canadian market who are not Canadian, but I would be sure of it that number is dwarfed by the amount of non-Americans who are invested in the American stock market. So an American ETF, an American spot Bitcoin ETF, is a huge signal to the rest of the world. Huge signal. And like we both said, there's no substitute for holding your own keys, but it is a good onboarding tool. I think we're going to see a lot of people that, maybe they're afraid to hold their own keys, but they'll throw a couple $100 in a Bitcoin ETF, and that might be the little nudge they need to go out and learn a little bit, to go out and get a book or to listen to a podcast or to watch a YouTube channel, right? Like, I think we're going to get a huge influx of not just liquidity. I think we're going to get a huge influx of eyes and ears on what we're doing, right, around here. So time will tell. I hope it's soon. I hope they're all approved at the same time. I don't want to see black. I don't want to see one company getting in there a week before the rest.
No, I
How
don't
did
think
they go in Canada? I think they approved them all at the same time in Canada, right?
I think they only approved one first in Canada. I could be wrong. I think it was the 3IQ one that Greg Foss actually helped to kind of do the paperwork for. Ronald in the comments, nice chat. I'm a Vancouverite. Nice to see some discussion that's not all US based, but we're such a small market. Well, we're growing, and it does matter. We're, when I say this about, we're two Canadian Bitcoiners here. We're pioneering this stuff in a big way relative to our population. And I think when you specifically look at like the non-custodial products, like the fact that there are 3, including Beaver Bitcoin, awesome sponsor of the show, and it's becoming I think personally, and maybe I'm just seeing this from a Bitcoiner's perspective, but I'm seeing uptake of these non-custodial platforms really growing and starting to compete with the custodial ones. And I think people are really starting to see the difference who have spent a bit more time in this space. All I know is that all the people I know from the Vancouver meetups, they're starting to ditch some of these custodial platforms, the BitBuys, whatever you want to call them, and move to just holding their own keys, but also just stacking with the non-custodial, because you might as well not keep any Bitcoin on these platforms if you don't need to, right?
I think that's also a function of the length of the bear market.
Yeah, exactly.
So the people that are still coming to our meetups, and shout out to everybody out there in Ottawa. We have a meetup coming up on Sunday. So, check that out, meetup.com, Ottawa Bitcoin. We're meeting on Sunday. the people that are still coming to our meetups now, the Bitcoin meetups, after a year and a half of this brutal bear market, they've done the time. They've done their time. They understand the value of holding their own keys. They understand of getting their stuff off exchanges. Even non-KYC, we're seeing more and more uptake of non-KYC Bitcoin. I think that I agree with you. It's awesome sign. It's amazing. It's amazing. It's great. I want to see more of it. But I think that's a lot of it because of it's just been a slodge of a bear market.
And, you know, we do have our Bitcoin ETFs here, but no one seems to own any of those. I don't know a single Bitcoiner who owns a Canadian Bitcoin ETF, even for their like pension or whatever.
Well, I mean, let's be clear here. No, this is not financial advice in any which way. Do your own research. This is for educational purposes only. But you know, in Canada, we do have tax shelters for people, like TFSAs, tax-free savings accounts, and RRSPs, registered retirement savings accounts. And these ETFs, these Bitcoin ETFs, do qualify for those vehicles.
Yeah.
So these ETFs are, if that's your profile, if that's in your risk profile, that is possible.
That's true. Yeah. So there is some advantage. Matitya here has an interesting comment. Don't you find it concerning that literally everyone is bullish and absolutely sure that the Bitcoin spot ETF will be approved and there is no other way? Basically everyone on one side of the boat.
Yes.
How do you feel about that?
I kind of agree. I'm on record of saying that I think, while I think this approval of the Bitcoin ETF, it looks like it's coming, may or may not come. It looks like it's coming. I think it's bullish long-term, and it's bullish for getting people involved in the space. I would not be surprised to see an initial pump in price and then a lag down. And it'll be kind of known as like, oh, that was a bit of a nothing burger. I think it might liquidate shorts. But honestly, I think these companies have been stacking Bitcoin for a while. I think companies like
some way they've been scooping up the mining companies. They want to get exposure, and like the mining company rally in the summer was completely unfounded, and now they've all dropped like 70%. But that's what they had to do to kind of ensure a bit of their spot, right? They got their 10-15% of Mara and Riot and a couple of the others. I'll give you my take on this because I remember 2019, and I just see so many parallels with 2023 and 2019. But in 2019, there was only one interesting story about Bitcoin that everyone was talking about. And it wasn't even about Bitcoin, really. It was about Facebook or Meta developing their own stablecoin called Libra. Because the idea there was that they were going to create this consortium of different companies that were going to back, you know, the usability of this stablecoin. Uber was on board, PayPal, and they were going to try and make this a thing, right? Everyone uses this stablecoin. And the stablecoin was going to be all these different currencies in one basket. But the denomination wasn't quite the US dollar, but a lot of it was just US dollars and euros and all that. And they went through the regulatory ringer with this project. You know, Mark Zuckerberg was in front of Congress. I think, I forget the guy, but he was on Peter McCormack's show that was working on this.
David Marcus, right?
David Marcus, yeah. So they put him through the ringer. They tried to get this product to market, but they couldn't. Ultimately because of the regulation, and there was no will. But attached to that was this other company that still exists called Bakkt, and Bakkt was launching a Bitcoin futures product, and they were coming out with all these things around Libra as well that would basically kind of open the floodgates for every single merchant like Starbucks, Chipotle, whatever, to start offering Bitcoin rewards to their customers. And so the whole idea was that, oh man, all these companies, you know, all these institutions are going to make Bitcoin mainstream now. Back then, it was about it being part of this stablecoin connection and, you know, a rewards mechanism. And it was going to be Bitcoin will enter the popular mind sphere again. We'll go to the moon. We weren't having these really in-depth conversations about its place in a portfolio. But I see the same pattern repeating this year where everyone is obsessed with like, as soon as this company, you know, enters the space, there's not enough Bitcoin on exchanges and they're going to change the way that people see these things. And then ultimately 2019, all that stuff, you know, went out with a whimper because none of these products actually came to market. And so Matitya, you bring up an interesting point, which is that yes, the SEC, while they can't use the same old excuses anymore, the judges have kind of slapped them on the wrist for that. They can find ways to delay these things and keep pushing them. And the question is just how much of whatever price we are at today is being held by hodlers, essentially thinking ETFs around the corner. And if we get the signal that Maybe it's not. How many of them are going to start bailing for, greener pastures or other assets to invest in? I don't know.
I wonder how
But
much price pays into this, and we don't talk about
yeah,
price very much because I
no.
mean, I know I don't really care, and I don't think you really care about price. It's not something super important to me, but I wonder how much price plays into effect the demand that people are going to have for these products.
Mhm.
When Bitcoin was, under 20K US last year, I don't think there were too many people screaming for a Bitcoin ETF from the markets.
Well, it
All
seems
of a
so far
sudden,
away too, because we just witnessed all that fraud go down. Just like ETF approval, no
yeah,
way.
exactly. Nobody wanted it. Nobody wanted
Yeah.
to be anywhere near the word cryptocurrency back then. And now all of a sudden, here we are. We're up 70% since then, 70, 80% since then.
Mhm.
Um, the FTX stuff is pretty clear. That's not a Bitcoin story at all. That's a fraud
Mhm.
story. Now all of a sudden, more and more people are asking for this product. What happens if we go up another 20, 30, 40% from here? Like how loud will the chanting be for that ETF? It seems pretty loud already.
Mhm.
And I know we're in the echo chamber a little bit, right? Like we hear, we're in the Bitcoin echo chamber. But even watching congressional testimony on this, politicians in the US screaming and yelling at the SEC to get this thing approved.
Mhm.
I wonder how much longer they can hold off. I really don't think it's that long. And I could be wrong.
I don't think it's that long, and this is where I don't wanna stay on this topic for too much longer, but this is something where I start seeing the gears shift a little bit, is I think that the likelihood of this ETF approval, it gets higher every single passing day seemingly.
It has to.
I think it will happen. I'm positive on it, but that's not the most important story to me. The most important story to me is going back to this chart, which is showing the price of Bitcoin denominated in bonds. And it reminds me so much of the idea that a lot of us Bitcoiners kind of have gravitated towards, that Bitcoin eventually is a black hole that demonetizes everything. And I think we've seen a little bit of it with gold. I know the gold markets have a history for manipulation and all that, but you're telling me after all the stuff that has happened since 2020, gold is still under its previous all-time high? To me, that is partially a symptom of Bitcoin demonetizing gold as a store of value. Now we're starting to see that treasury bonds are also not a good store of value. So what's the next move? Well, Larry Fink can tell you that they're a flight to safety, but people are going to be dumping bonds to buy Bitcoin. I think that is the asset that people get rid of to start making some room in their portfolio for Bitcoin. I don't
Yeah,
know how
1,000.
long it takes for it to happen. It could be, something where people just put their new passive flows into Bitcoin. They get that 1% or 2% allocation, and it takes a couple of years to establish. But if you were going to sell something off, you usually try and sell the losers. The equities are big winners. Apple continues to pay a great dividend. Microsoft, they're continuing to invest in the future. Why would you sell one of those companies, right?
When
And
bonds just
so,
keep going lower and lower and lower, and inflation
yeah.
is getting higher and higher and higher. It only
Mhm.
makes sense. Preston Pish said something today on the Swan Signal podcast that I hadn't thought about, and I thought it was just great. We're talking about the spot Bitcoin ETF, right? And
Mhm.
it's good for adoption. I think we can argue what it's going to do for price or whatever, but what is it going to do for innovation in the ETF space? Like, what would happen if you could buy an ETF that wasn't 100% spot Bitcoin, but it was 2% spot Bitcoin with 98% S&P 500?
Yeah.
Or a product that was like the TLT, it's the bond ETF, or maybe like a TLT BTC product where it's half bonds, half Bitcoin, being able to, and you can buy that as an ETF.
Mhm.
The, Bitcoin being allowed to, a spot Bitcoin ETF will open up the floodgates for all these types of products.
All sorts of experimentation. Yeah, leveraged ones, short ones, all of that, right? Um,
Never leverage, never go short, guys.
no.
Not trading advice, not financial advice, but don't leverage, don't go short.
Where I wanted to wrap up this position, and I'm curious on your thinking of this, is I think incentives around the buyers and the sellers of US bonds are of the utmost importance to the people working in the Federal Reserve and in the finance department of the United States. And I think that is why I think there are plenty of opportunities for, these regulatory bodies to go after Tether. But if you're to believe what Tether tells you, that they're buying up all these US bonds, then there isn't an incentive to go after them, right?
Exactly.
Yeah, maybe some of the stuff they're doing is shady, but think about it. Like, by now, the US government has cracked down on every single big player. I think they know in the back of their head that nothing good comes out of cracking down on Tether and trying to knock them out of this game, because they lose a pretty big nominal buyer when the buyers are exiting stage left right now for US bonds.
And they're also a domestic player as well, right?
Yeah.
Tether, if I'm not mistaken, are owned by Circle, which is
no.
US.
That's USDC.
USDT?
So Tether is the sketchy one, but the one that everyone actually uses.
Okay.
Yeah.
Okay.
So they're offshore, but and again, we don't have the QSIPs. We can't prove that they own all these treasury bonds, but if you're to believe it, it would make sense. If they have all this USD in demand, they at least have a good chunk of them, maybe not 100%, but at least 50, 60, 70 billion dollars worth of short-term treasuries. And the US is issuing short-term treasuries a lot. That's how they're financing their debt. Right now, it's a terrible idea to issue long-term ones. So they're buying all this debt up. They're a good nominal buyer. That's why they haven't been gone after. You put out a spot Bitcoin ETF, and if it becomes glaringly obvious, like it has to me, that the bond is the thing in your portfolio you dump, then Bitcoin starts to demonetize US debt. And I think that is when things really start to get cracked down in the US, when that becomes apparent that, hold on, interest rates might be going higher because Bitcoin is being stashed in everyone's portfolio now. And I know that sounds like way, way out there, but I think it's a tangible threat, and it's a reason for the US government to not approve one of these Bitcoin ETFs. Maybe they don't see it quite like that yet. They would have to be optimistic actually about Bitcoin to see it like that. Optimistic about it really taking that big of a chunk of people's portfolio. But I think when it actually happens and we start getting our spot Bitcoin ETFs, it will become very apparent that it is a massive threat to the US's ability to issue debt. So
time will tell. Time will tell.
Yeah.
I don't really remember, but when they released the futures ETF, there wasn't a whole lot of chatter beforehand before them actually launching it, right? It seems like a couple of months people were talking about this futures ETF, and then all of a sudden we magically had it.
Yeah. Well, we had the Bitcoin futures for a while, and no one thought that we would actually get the futures ETF approved. And then all of a sudden it was like, oh, wow, okay.
Yeah, and there it was. And
yeah.
The fact that the spot has taken this much time, I mean, we can conspiracy theories all day long about like why they were so keen on getting the futures product out and are dragging their heels on the spot, but it's curious for sure.
I don't think they were like keen on getting the futures product out. I just think that they realized like it wasn't a big deal to let that one go through. Because it was on a regulated market where they could see everything that happened. And I know that the price is correlated, but it was just, I think, an easier thing. I mean, if they wanted to really oppose it, they could. But I just think that they just let it through to give some, candy to the babies. I don't know.
Do you wonder sometimes if the Canadian spot Bitcoin ETFs were kind of let through? Because do you think that our regulators, that they just missed that? You think if they could do it over again, if the Canadian banking regulators could go back in time, would they have allowed our spot ETFs as easily as they did?
I'm not sure, but I also know nobody can name a single Canadian regulator, even a Canadian. We all know who Gary Gensler is, and we even know who some of the other chairmen of the SEC are. We have no idea who approves them in Canada.
Yeah,
so they're not like,
and the Ontario Securities Commission.
There's big time politicization of the SEC in the US. Like, they're such a public figure, and they're scrutinized. It's because it's the most in-demand public market, right? So they're wielding the power gavel as much as they can.
And the level of celebrity as well, too, right?
Yeah.
Like Janet Yellen, even Gary Gensler now is kind of a household name. Like maybe it's not that much of a household name, but I bet you most people know who Jay Powell is.
I don't want to get into like the celebrityness of it all too, but Gary Gensler has like a complete history of clout seeking. He has pushed so hard to get cabinet positions. He was the CFO of Hillary Clinton's campaign. The guy he just works his way through Washington. So,
I heard he's
doing his job there.
A history with Elizabeth Warren as well too. Like,
yeah.
Kind
All
of
right.
strange for a guy to have a history with Elizabeth Warren, like political history, like personal, they were colleagues or whatever, and also have taught a course on Bitcoin at MIT.
Yeah.
That's interesting, right? Like, it's an
I don't know
interesting,
why he taught the
interesting
course on Bitcoin
resume.
at MIT, honestly. It doesn't really fit with the rest of his history as anyone, but yeah. Anyways, we're going to move on to the next topic here. But before we do that, quick shout out to Beaver Bitcoin. They make this show possible. They give us the time and flexibility to rant and talk about all these things and bring this to you guys. So I hope you're enjoying the show. Please give them a check out, a quick ad, and then we'll dive into talking about inflation. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. Awesome. Also, if you don't follow Beaver Bitcoin on social media, do follow them, because I'm doing all these trivia videos with them now. So if you fancy yourself an expert or an intermediate or a beginner in Bitcoin, check out their channel. I did a whole bunch of them down in Pacific Bitcoin with some pretty big Bitcoin celebrities. So those will be coming
And there was
out.
some hard questions in there. I didn't watch all of them, but
I'm
there's
making it
a
even
lot of
more
those I didn't
brutal.
know.
I have too many people who are good at it. I stumped BTC Sessions on a couple. Tone Vase, Stefan Lavera. I think I stumped on a couple, but I'm going to crank it up. I'm going to make it spicy, because all these Bitcoin conferences, you're just surrounded by this wealth of knowledge. And I'm like, there's always got to be something that people don't know. Here's one. I'll give you a free one here. What does the word Satoshi stand for in Japanese?
I have no idea.
Wisdom. Now you know. All right. Speaking of wisdom, let's talk about inflation.
Or lack thereof.
Or yeah, speaking of lack thereof wisdom, let's talk about inflation. So this video blew up today on or this week on my feed. I'll share it here real quick. This is a guy going into Costco talking about, what we're told versus what he's seeing on the ground here.
This man reveals the true food inflation by comparing prices with the price tags on photos he took a year ago.
So I'm walking around Costco here and I'm noticing these prices. For example, these Madras lentils, $15.99. I bought those a year ago for $6.99. I keep getting told that we got, 6-7% inflation. You gotta be kidding me. Let's look at what else we got going on here. We literally bought this chicken broth, $5.69, 2 months ago. Dang, this is the flour we were buying for $5.99 last year.
The government has its own math that they manipulate in a dodgy way. This man reveals the truth.
All right. Yeah, so I mean, we're all on the same page. The data even is showing it now to some extent too. So this chart here shows you what their CPI level is versus what people's perception of current inflation levels are. Now, I actually don't know how perception of current inflation is measured, like how they're getting people all thinking it's 6.6%. But the headline here is that one of the biggest gaps ever between perceived inflation and what the CPI is right now in Canada. So again, total mismatch between what people think is happening with inflation and what the numbers are saying. And then, of course, more Keynesian bullshit about Bank of Canada warning that, if people think prices are going to go up, it could become a self-fulfilling prophecy because everyone's thoughts are what creates inflation, not the supply of money. But I want to get into this with you, Boomer, because you're good with some of this stuff, better than I am. I come at it from a casual lens. I have my own perceptions on it, but I want to kind of ask you, like, where do you think the mismatch is here? Specifically in maybe like certain sectors of the way CPI is measured or baskets? Where are you seeing this like complete disconnect starting to kind of?
So let's back up a little bit. Like, let's back up for the people listening. When people say inflation, right? We usually mean price inflation, how much prices are going up. So when somebody says inflation is coming down, that doesn't mean that prices are coming down. That means that the rate at which prices are going up is a little bit slower. So this month, this week actually, StatsCan released their monthly CPI numbers, the Consumer Price Index, and that's the measurement that we commonly use for inflation. So they released the September numbers, and the September numbers came in at 3.8%. So that means, according to their calculations, that things in September, a basket of goods, magical basket of goods, which we'll talk about a little bit later, this magical basket of goods is 3.8% more expensive than it was 12 months ago. So in September of 2022. So month over month, inflation was actually down. So the August number for the CPI was 4%. This month it came in at 3.8%. So the media kind of tells us inflation is going down, inflation is going down. So we hear this on TVs, oh, inflation is coming down. But then when we go to the grocery store, we go to Costco, like that young guy went, and he sees that things are more and more expensive. Well, that's because inflation compounds on top of each other. So sure, let's take it at face value that September inflation numbers are 3.8%. Let's take it. But that doesn't take into account that a year before, inflation might have been 8.5%. And so that means that it's compounding. So the overall 2-year inflation number is somewhere around, 12, more than 12. It would be like closer to 15% because it builds on top of each other. And I think that's a lot of things. If you're listening to this video, if you're watching this video on a Friday afternoon, you're probably aware of this. But I think for the majority of Canadians who read these articles, I don't think I think they're being gaslit a little bit. Like they're not.
The biggest gaslighting is the equivocation of disinflation with deflation, and they do it all the time. Prices are lower, right? Inflation is lower. Like they use those two terms almost interchangeably to almost manipulate you into thinking prices are down when they're not. They're not down. And again, like I was thinking about this before, I think the easy analysis of it is, yeah, they use that language to kind of manipulate the way that people think. But I also think they do it and they don't get a lot of opposition to it because people are still rooted in this idea that we have to have some inflation. We got to have some inflation. The money has to expand. So we don't want to actually ever use the word deflation because that's a no-no word. That's a bad word. Great Depression, whatever. That's the go-to example for all the Keynesians of like why you don't want prices to deflate over a long period of time. Well, look what happened in this, section of history. So it's a two-pronged thing, I think, a little bit, and that's why they're able to spout out this BS and not really get much pushback on it.
Yeah, and I still think that the average consumer, the average media watcher is still hearing, okay, well, we had supply chain issues related to COVID and everything was shut down, and they can wrap their brain around that. And, I'm sympathetic to that. Like there were supply chain disruptions and those types of things do contribute to inflation, but it doesn't, you can't keep using that card over and over and over and over and over. 5 years from now, you can't keep saying that it's supply chain caused by COVID. Like you just can't keep doing that. At some point, you have to be honest with the people and say, like, look, like we printed a bunch of money over the past few years.
You don't need to be honest. You just come up with new lies like this one. It's a self-fulfilling prophecy. We keep fulfilling our own prophecies, man. That's why prices won't come down.
Inflation, the truest definition of inflation is an inflation of the money supply. That's what inflation means, is how much money there is out there. When we're talking about CPI, we're talking about price inflation. And when you compare country, another thing I want to touch on a little bit, we were talking about this before we went on air, that every country has their own way of calculating CPI. So every country, it's a little bit different. And there's nothing special about this one number. Like it's not magic. Like I said, 3.8% is what came out for September. That doesn't mean anything to the average consumer, because the average consumer, everybody's inflation is going to be a little bit different depending on what your basket of goods is, right? Depending what you buy, depending on what your lifestyle is.
And to be And to be fair to them too, like they don't claim that it's a be all end all as well. Like the politicians like to use it, but the central banks even admit that like it is not a cost of living index, right?
Yes.
It's not, year over year. You don't use that to measure cost of living for every Canadian, right? It's just, in their opinion, the best way of doing it. They've
Yes.
figured out, well, we've optimized it as best we can.
And it is a difficult thing to measure.
Mhm.
Like it is a very, very difficult thing to measure because every single one of us has a different inflation number.
What did you say before the show?
For the longest time,
What
I
did
actually
Taylor say?
calculated my own. I did this for years. I did this for like maybe 5 or 6 years. Every single month, I would keep track of every single thing I bought. Everything, like to the nickel of like how much money I would spend. And I could kind of track my own inflation. And if you did that, you would come up with a completely different number. And if everybody listening to this did that, they would come up with a different number. So that 3.8% it's just trying to get at what the average Canadian, and it's not even really the average Canadian, what an average Canadian should spend on these buckets of goods based on an allocation of each amount of thing, right? Like the Stats Canada breaks it down into 8 different categories, right? So I could try to remember them off the top of my head, but I'm going to go to my list.
We'll pull it up. I had the graphic for it. Here we go.
So you got that cute little graph. Yeah. So there we go. So take a look at like the second circle.
Here,
so the first circle is all items. There we go.
Yeah.
So
first circle is all items.
Yeah, let's start with food there. You were right at food. Let's start at food and then go clockwise from there. So for the average Canadian, this magical person who doesn't exist, about 17% of their monthly income goes on food. And next is shelter. Can you go over shelter? 38% on shelter.
28%, they say.
28% on shelter. What's the next one?
Household 14 operations. Yep. Food or clothing and footwear, 4.7%, 16.4% for transportation, 5% for health and personal care, 9.9% for recreation, education, and reading, and 4.5% for recreational drugs.
There is probably no Canadian in the 41 million Canadians that have exactly that weighting. That doesn't exist, right? So what StatsCan does is they come up with that weighting based on a survey from 2 years ago, where they surveyed a few thousand Canadian, I don't remember the exact number, and got them to write down, how much of your weekly income do you spend on this? How much do you spend on that? And they aggregated that number and they came up with those weightings. And within those weightings, they broke them down by product. So there's almost 600 different products to make up those 8 different categories. And then they track the prices of the price changes in all those things.
Yeah, this is just a look at some of them. There's a lot for food.
Yeah. In total, there's almost 600. I think there's like 591 different items. And again, like no Canadian buys all of those things, right? None, not one. We all buy different things in different allocations. So it's not going to be a perfect number. This magical monthly CPI number, it's not a guess. I wouldn't call it a guess, but it's the best thing that they can come up with. And to be honest, I think the Canadian methodology for coming up with this is better than the US. Like I'm not incredibly familiar with any of the other countries, and even the US, I haven't gone into great detail, but I don't think it's a horrible methodology. I think it's the best that they can possibly do.
Well, that's where I challenge it, right? Is like, you're never going to get it all right.
Exactly.
But I think we talked about before we did the show, I think there are some glaring issues on it where when you have issues or parts of this that are that glaring, you get into gaslighting territory because it just gives the politicians fuel to just look at the number month over month and say things that blatantly aren't true and are causing this incongruency with how people actually feel. So let's dive a little bit into those, because I agree it's not a science. It's like you told me this before the show. It was a Sailor quote that in inflation CPI is a vector, right? And so that is it measures a certain scale and magnitude, but it is different for every single person. And so you do your best to kind of find some kernel of truth based on, you know, how much does an average person spend on this XYZ percentage allocation. You do your best, right? But yeah, in Canada, there are some, you know, glaring incongruencies about it. The number
first
one
thing that
one
comes
that,
to mind, the first thing that comes to mind and I agree with you, by the way, like it can be
Mhm.
improved. I just think that it's a difficult thing, and you're highlighting it right now. I think
yeah.
shelter and food, and maybe transportation would be the other one that I would highlight
Mhm.
as being like, okay, like that's not. Go back on shelter again. How many people are spending less than 28% of their monthly income on shelter?
Not even close.
How many are spending more? Or let me rephrase it. How many Canadians are spending more to significantly more of their income on shelter than 28%?
I should have done a poll.
It's probably 80-90%, right?
Yeah.
Like
Shout out in the chat if you spend more than 50% of your
yes,
expendable income.
I think a lot of people are, yes, I think 50% would be high. Like I'm approaching that number, and like I have a modest place that I happen to buy at a good time. I've owned my place for a little while, and I renewed my mortgage recently, like 2 months ago, and like
Oof.
I'm paying significantly more in my mortgage than I was a year ago, right?
Mm-hmm.
I don't think there are many people that are paying less, that are allocating less than 28% of their monthly income to shelter. The same with food. Can you go over in food? What was food again? It was like 16%.
16.6%. Does this include like yeah, it includes restaurant purchases?
Yeah, it's broken down from there. So you can go down, even it doesn't go down to the actual, they don't do it fully, but you could find out what the allocation to blueberries is if you had the micro data. Yeah.
Yeah, berries. Oh, I had it there.
Yeah.
Oh, yeah.
There you go. There you go. But
22%.
even from there, you could go even one further. How much is allocated? It's probably not on the chart, though.
Jams and jellies, dried and
Yeah.
dehydrated fruit. Yeah. They get pretty in the weeds there. You know what? Sorry, I'm gonna bring this up real quick. I have a little chart of all my budgeting expenses. My food as a chunk of my monthly expenditures is actually exactly 16.5%.
Well, that's
so they're pretty
amazing.
on the money for me. It's pretty
That's
close
good.
for
That's
me.
good.
And I eat
That's
out
good.
quite a bit too. So
That's good. That's good.
Yeah.
Well, it's not good that you eat out. You don't eat out.
Oh, I like it. I like supporting restaurants. Yeah, I spend my Bitcoin at the restaurants, man.
Okay, well, you get a pass.
Trying to get things going here.
I'm gonna be a true Bitcoiner and say, like, I buy all my food from farmers and I pay in Bitcoin. I'm trying.
No.
I'm actually working really hard. I do buy from a local farmer, and every time I go, I talk his ear off about Bitcoin. But
the food one can vary drastically, I think, too.
the food one,
yes,
the food one can vary drastically, and the shelter one. Do keep in mind that these allocations were created from data that was 2 years old.
Mm-hmm.
2 years old.
So right? This is the allocation in 2021, basically, or 2020. Yeah,
from a survey.
Mm-hmm.
So this was the allocation taken from, they didn't actually call. They have like an electronic survey that they have to fill out. How much money do you spend on shelter, whatever, like per month? And these are the numbers that they came up with based on 2021 numbers, right? So right off the bat, housing prices have been they've skyrocketed so high in the past 2 years that just on that, it's probably another 10%, right? At least.
So not only are, and we can dig into the granularity of this in a bit, but not only are the calculations for how much people are paying dollar-wise for shelters wrong, but the basket weighting is pretty inaccurate. And so that creates like a ton of problems, right? It's just like, well, no matter what happens to the price. Yeah, it's
lagging. It's lagging by 2 years right off the bat.
And it's also so check this out. This is even another one, and I don't even know how close this is, but this is what I read from another report that In Vancouver and the Greater Toronto Area, people spend an average of 79.7% and 72% of their income on housing, respectively. And actually, across Canada, I don't know where this stat comes from. This looks like it actually came from 2017. The average Canadian spends 45.9%. So different study, not linked to the CPI. It's just saying average Canadian, it's actually about 45.9%.
That's where my number would be. I would be in the 40 to 50%. Like if somebody put a gun to my head and say
28%, even if they did this 2 years ago, that's what I wonder is like, how on earth did they get 28%?
Well, I'm not going to go. I don't know the details of the methodology, and I don't know the details of, you know, how they sampled the people, and, you know, did they pull an equal sampling from rural areas versus urban areas? Did they oversample maybe places that have lower housing costs? There's that. There could be a sampling issue, again, for sure.
So tricky to do this stuff.
So tricky. Yeah. More likely is there's an issue with the reporting. The people that were reporting this thing were probably underreporting what they're actually spending on rent and underreporting what they're spending on their mortgage. That's even more likely. So there's a 2-year lag when we've seen prices of rents and mortgages go up pretty significantly over the past 2 years. So right off the bat, we're dealing with that lag, and we're dealing with, maybe we have some sampling issues, and we definitely have some reporting issues. I can't say definitely. I would probably have some sampling issues, which I'm not sure. And I would be willing to bet my life that there's some reporting issues, because there always are with these types of things.
All right. So right off the bat, because I like to talk about solutions to things, and there's always trade-offs when you start adopting different methodologies, but like right off the bat, if you had to have a different way of collecting the data or using a completely different source to get a more accurate reading of shelter in here, because we can all, you know, ponder what the actual amount is, what would you do if you were in charge of Bank of Canada to try and make this just even a little bit better than
I would use real-time data as best I could. I would use real-time data as best I could. We have, I mean, obviously there's confidentiality issues here, but we have, every time you go to the grocery store, everything is scanned all the time, right? That data exists. Kijiji, Zillow, all these, you know, rent, like whatever websites are, realtor.com. There are a ton of
mortgage brokers.
There's a ton of the banks. There's a ton of administrative data sources out there for things that are super important. And energy, I'll throw oil in there too. Like I'll throw energy in there too. Because I do believe that those are the 3 most important, where energy, shelter, and food.
What? Paul Krugman says they're not that important. Come on.
Yeah, well, yeah. If he has a Nobel Prize, I deserve 2.
Yeah.
Right? Like, anyway, we could use administrative data sources for this, where we wouldn't be relying on respondents, we wouldn't be relying on surveys, and we wouldn't be using something that is lagged out 2 years, 3 years. In some cases, it can be even longer than that. We could be updating it incredibly accurately. Now, what would happen with that is potentially that could cause more volatility in the numbers. Right?
Yeah. So we talked about this. The devil's advocate against doing real-time data is that, yeah, you create a lot more volatility. Maybe you don't account for seasonality in some of these things. Like you were saying before to me, that if you took, you know, retail sales and how much people, you know, spend on retail, and you did real-time data on that every month, yeah, December, January is going to look crazy compared to the summer, maybe, or the fall.
Yeah.
Right. It doesn't work for everything, maybe necessarily as the most accurate way to get data.
Yeah. And the thing is, the technology exists now, right? Like the thing, and StatsCan is good. Like the Canadian Statistical Agency, to me, like, I don't speak for them. You know, I don't in any way, shape, or form do I trying to you know, say that I represent them in any way. I don't. But I do think they're good. Like, I do think they're trying their best to do this. I just think that they're given, this is a near impossible task. But we do have technology available. We do have real-time data available that could make it better, I think. But change is hard. Change is really hard. And people don't like, you know, they don't like, you know, shaking the boat.
I think what it comes down to is is this concept of like the individual versus the collective, and every single thing like this, which is like a data point or a vector, plays into this. And this is why it's so hard to talk about Bitcoin and some of these other things as kind of like a one-stop solution for everyone and the individual. Everybody is going to react to these things differently. And so like where I'm trying to get with this is that it's so hard to look at anyone's version of CPI. You're either going to agree with it, but then someone else is not going to agree with it at all.
Yes.
There's another one here that I saw. It's called Trueflation. And this one, going back, this is only showing me 1 year. But in 2022, it was showing like 9 to 12% as trueflation. And that, to me, that felt closer to what it was like at the time. But that's not going to be for everyone, right? And then now it's saying, actually, the trueflation rate's closer to 2%. So again, this is an example of one that's a lot more volatile than the reported rates. But again,
and the problem as well, I don't want to go back to this, but I do have a thought now. And before I lose it, I want to get it off my chest. When you have lagging data, like we have for our CPI numbers, that data may cause problems in the future because it's going to lag. Let's say something happens in the next couple of months where inflation genuinely does go significantly lower for whatever reason, being a recession, a depression, whatever. Like for whatever reason, there's a dramatic decrease in prices over the next couple of months. Well, you're only going to see that in the sampling for 2025.
Yeah.
Because somebody who's creating the methodology for calculating inflation in 2025 is going to be looking at 2023 survey data and saying like, oh my God, like the first half of 2023, I was spending 60, 70, 80% of my money on rent. And then for whatever reason, rents went down dramatically for whatever reason. Now, all of a sudden, that 80% allocation that you have on your 2025 CPI number is going to make inflation look wrong again.
Yeah.
Sorry about that.
Yeah.
Go back to trueflation now. I just want to get that off.
No. You're 100% right on that. I think, like the charts I always find really interesting to look at, and now they're permanently etched into chart history, are things like the unemployment rate. And again, even that's one that I have a super big problem with,
as you should,
in terms of how they do the methodology of it. But you were able to look at that chart now and very distinctly see where the pandemic was, because they weren't using a moving average, because it was reactive data, right? Because it was within 1-2 months, massive layoffs, and then everyone's back to work within the next month. If you use lagging data, maybe that could have just been, little tiny bump over it. But it was a reality for people that at maybe one point, peak of the pandemic, maybe there was a 20% unemployment rate, because you were told, yeah, you're out. Maybe you're coming back, but you're out for now, right? And that makes sense when we look at the prices of things during that time, specifically like assets. We saw the shock in there. But when you look at the inflation rate for that time, you don't really see that. And there was some deflation when that happened too. When you have that much unemployment, demand for things went down. We know oil went negative, for example. That was factored into inflation, but it took a while for it to kind of come in there. So it's tough for me to talk about this stuff really with what I feel is a lot of credibility, because I just come from a world of film and trying to translate what I feel is the truth into, a more condensed version of it. But I would say I totally agree with you, specifically for housing. And I think because of how politicized housing has gotten, it isn't really, there is no incentive to kind of report it truthfully for anyone. But, I'll make a plea to Pierre Poilievre, the guy who's probably going to be our next prime minister here in Canada, that if he's a numbers guy and he really cares about numbers, he should be criticizing this stuff. And when he gets in power, I don't know how much power, they have in terms of influencing the way that the Bank of Canada does their methodology, but I would agree with you that they should start moving it to a more active scope of what people are actually paying for rents and mortgages. If it's really his MO to make housing more affordable for people, but we'll see. It's hard to ask for politicians for anything, is it?
I mean, housing in particular, it's a supply and a demand issue. So we have an increasing population, more and more, and it's an increasing population driven by immigration. So these are people coming in needing a place to live right away, right? If you have an increasing population because our birth rate is higher, well, a baby lives with his parents, right? So you don't need new housing. Generally speaking, you don't need new housing for a new baby, but you do need new housing for a full-grown adult moving into a country, or a family coming into the country. So
my bigger point on this is that, like, we agree that the lagging data and some of the methodology for the housing, it obfuscates a truth. Because we all know that housing is going insane in Canada. Like, we can just see the prices, right? But the closer you get to the truth, I think the closer you get to action. If we can stomach, if we're told we're getting 3.6% inflation because of a messed up shelter calculation, that breeds complacency and a little bit of inaction. But if we get the truth in there and it makes the inflation number, way higher, and people are, whether it's flawed or not, using that as a benchmark, then action will get done about it. The Trudeau administration has gotten away with completely ignoring that issue because it's not really showing up in the pertinent data.
I agree with you. We need more truth. I completely agree. Before truth, I would appreciate more transparency. Like that chart, that CPI chart that we were looking at, like that, looking at those allocations, like that should be on TV, right? We can show that can show Canadians, like, okay, inflation is 3.8% year over year in September, and according to Stats Canada calculations, 28% of your expected, budget, monthly budget goes towards housing. I think if we were transparent about that, the public would look at it and say, like, no.
Yeah.
It's definitely higher for me. Like, I'm closer to 50%. And if you're living in Vancouver, you're living in Toronto, you're closer to 70%.
Well, the data just doesn't even align at all with the basket weighting. It's not even like, I don't need to get anecdotal, feedback on it. It's almost like every other data source out there about housing is a much higher number than that. There's not probably a single one that is lower than 28% out there. I don't know what type of weird question you have to ask to get that, right?
I would agree. And honestly, maybe this is going to be triggering, but I think the Canadian way of determining this is better than the American one. Like, you did a short video on this, like, about housing in the US, about for inflation, right? Like, owner occupied rent.
The OEP, the owner expected. Yeah, because for people who own their houses, they ask them, okay, if you're not paying a mortgage or rent, how much would you charge rent?
Would you charge? That's an awful. That's awful. Like, that makes no sense to me. Yes. So I hate to sound like a shill here, but, like, I have my concerns with the methodology, for sure. Like, I think there are ways that potentially be better. I'm open-minded to it, but I also think that there are worse measures out there. There are worse, and I do think that they're trying their best here. Like, I really do. Well, let's leave it at that.
I think, it's interesting. I watch a lot of politics. The reason I bring up Pierre Poilievre is, I'm not like a massive fan. I think he's a little odd sometimes with the way he speaks. Do you see that clip with the whole Apple speaking the journalist thing?
Yeah.
I love that. Like, I love him when he's like that. I don't like it when he does these very campy videos of trying to explain concepts, or he'll pluck a person off the street and get them to, like, back up one of his points. They just feel like a little disingenuous to me. But the point is like, I think the metric that we should use to assess our politicians is the truth. Right? Like, are they telling us the truth? Even if they're not getting results of what they want to get done, are they communicating with us truthfully and respectfully? And I just say, to him, who's specifically like an economics and numbers guy, he has the opportunity to go in and change and dial in some of these things and make them even better. I know that maybe we're better with measuring inflation than the US, maybe. But there's a lot of room, I think.
An honest attempt to get something closer to truth is a pretty low bar.
Yeah.
Right? Like, if that's all we're asking from people, from our politicians or our leaders or our, heads of, our CEOs of our companies, it's like, guys, just try your best to be as honest as possible. That's a really low bar.
It is a low bar, but it should be an expectation, though, a little bit more. And that's, why independent journalism is booming right now, is people are craving it. They can't get the truth, or they cannot get the information they need on the things that matter to them. And that's why everyone has to hone in on every specific kernel of truth that exists in every facet of life to try and uncover, what reality is as much as they can.
Can I give you a
That's why you
hot
guys are
take?
watching this show, right?
Can I give you a hot take on that Pierre Poilievre Apple video?
100%. We'll do that, and then we'll wrap it up.
My hot take on that video is that it was staged. I don't think that I don't think that was organic at all.
When I watched it, I had the same feeling. Like, it felt too good to be true because it's filmed beautifully. It's like over the shoulder of this reporter. But I have seen reporters do that gotcha questioning, and that guy, I guess, like, you could have written a script, but I mean, like, we have seen the CBC journalists here.
Oh, I'm not, like, for sure.
Like, room temperature IQs, man.
Absolutely. I'm no fan of those 3-letter Canadian media outlets. I'm no fan. But there's something weird. Like, I watched that video for the first time. I'm like, no, it just didn't pass the smell test. But it's gone viral, like, all over the world. There were like 5 million views. I saw. And so I did a little bit of research on it. I'm like, well, let's see who this journalist really is, to see if he's actually a journalist. Because my first instinct was like, this guy is like some staffer or some actor that they hired. I'm like, no, he's a legit media person from your neck of the woods, from Vancouver.
Yeah,
so
that looked like it was Kelowna or something. But yeah, I mean, I think if they did stage it and it didn't work out, they just wouldn't have shared the video. But I would say, I guess it could be plausible that you could stage something like that and get that genuine of a back and forth. I just think,
but staged or not, like, I think it's fair game. Like
it makes a good point. I mean, it's just like, not like, even if you set up the scenario in which he's given these like dumb bait questions to respond to, it's not like he doesn't get them anyways. It was just captured so immaculately there. That it's almost suspicious. I think it's just the quality of the way that it's been done. Like, you've seen all the videos of like people shouting at Ben Shapiro or whatever, these guys at college campuses. Like, it felt like that, but just so pristinely captured with the apple and everything. It was almost.
I laughed. Like, I had a chuckle over it for sure. And
I read a really funny
game.
thing.
There's a lot
really
worse.
Funny thing about that. They actually say before you do any presenting, you should actually eat an apple beforehand because it makes your voice much clearer for microphone quality. I think it's something to do with just some of the proteins or acids in the apple, but it makes your voice way clearer. And they say the opposite thing to do is never drink sparkling water before you speak into a microphone because it makes your voice very sappy or weird sounding. So now you know. Some helpful signal here.
Okay, guys, you come in here for Bitcoin and inflation, and you get apple eating and sparkling water tips.
Yeah, so there you go. So eat apples before you speak. Don't drink sparkling water. But yeah. Well, anyways, let's wrap it up. That was a good rant there that we had. I think we covered some really important ground here. These are great stories to cover because they're almost evergreen in a way that I think the way that we measure inflation will be a conversation that we have forever. The Bitcoin ETF stuff, I mean, it's week to week, but it's just so exciting to keep on the kind of the precipice of. I'll end it with like a question, and maybe we can link to a source. Is there anything else that you read or you touched upon this week that we didn't cover in the show that you'd like to kind of share with people that you thought was interesting?
Man, I listen to a lot of podcasts, right? Like, I'm a podcast junkie. And if you're like a geopolitical guy and you're a Bitcoiner, I would highly recommend Tom Luongo's last podcast that he had with Caitlin Long. So Caitlin Long, she's the CEO of Custodia Bank in Wyoming. And this is her second time on Tom Luongo's podcast. And it's just interesting. Tom is not really a Bitcoiner. He's a Bitcoiner the same way that like George Gammon is. You know, like he's like, yeah, like, you're outside the system. It's a good thing. You know, that this makes sense.
Gold, Goats, and Guns. That's the podcast.
I would highly recommend Gold, Goats, and Guns. Caitlin Long's appearance on there, and she was on earlier this spring. I would also, listen to that one too. Absolutely to me, those might be the two best Bitcoin podcasts of the year. And I think it's because Tom is not a Bitcoiner. Because usually with these Bitcoin podcasts, it's a little bit of an echo chamber.
Yeah.
And
yeah,
it's sometimes
I like listening to George Gammon because I think he has some good points for sure.
Yeah. It's healthy. So I think it's healthy to have a Bitcoiner and a non-Bitcoiner, but someone he may not be a Bitcoiner, but at least understands. And Tom is that. And Tom and Caitlin just have like a very good chemistry, which I'm sure as a content creator, I'm sure that you can recognize, like those two people, for whatever reason, they just go together like peanut butter and chocolate, like it just
Oh,
works.
that's awesome.
And
I got to listen to Caitlin long more because I followed the whole thing with Custodia Bank and the Fed shutting her down. And like, I've listened to some of her stuff at Bitcoin 22 and 23, but
she's
I'll give
fantastic.
that one a listen.
Yeah, both of them. Give both the one from the spring and then the one from this past week. So that's the first thing that comes to mind. What about you? What was one thing that you saw that,
this one's like way less signal, but Spiral, which is a subsidiary of Block Square, Jack Dorsey's company, they did this funny 10-minute video because they're getting into the Lightning game, and I think they're making their own wallets and all that. They did this funny video called "Who is Bitcoin?" and they got this guy in a little suit.
He did Peter McCormick. He was on Peter McCormick, the guy in the suit.
I haven't seen the What Bitcoin Did podcast with him, but I think that's great. I'm excited to see more of this guy. But he's like a Muppet almost parody.
Man, this stuff is so
like,
important.
Who is Bitcoin? Everyone asks like, what is Bitcoin and why? But who is Bitcoin? I love it.
This stuff is so important.
Spiral.
It's so incredibly important. This like, I'm sure it's still high signal. I'm sure it's coming from a good place, but it's lighthearted. It's fun. It's the brand. And we talked about this last week with the energy drinks, about the sovereign energy drinks.
I'm picking up my crate on Monday.
It's so good that we have this in Bitcoin. People doing things in Bitcoin that are not hardcore macroeconomics and charts and ETFs and, oh my God, it's the end of the world. Like bonds are exploding. I think it's fantastic. And I love seeing it. I absolutely love seeing it.
Yeah. What I want to get into too at some point is doing more of this sort of stuff for Nostr, because it's like, I think that almost has more growth potential in the short term than Bitcoin does. And I know that sounds outlandish because it doesn't feel finished at all with the clients and the relays and all that. But it's another thing, these open protocols, like actually getting the message out and talking about it in a way that intrigues people is always a challenge. But I'm having so much fun with Nostr lately. It's like Plebster is the client that I use on my phone, but it's just, maybe it's just one of these things where, because it's so nascent that, you don't get all the clutter and stuff of like a bigger social media network, but it feels like, everyone says it feels like Facebook, Instagram, Twitter, when these things first came out and they weren't covered in ads, and you got just more genuineness and people weren't always clout chasing. And it's great. Like just so many great conversations on there.
And positivity.
Yeah, tons of positivity on there too.
You go on Twitter, X, whatever they're calling it nowadays, especially with the horrible stuff that's going on in the world, right? It's just rage, it's engagement, right? And then you go on Nostr and it's all love, like it's people playing around, people joking around, people still sharing stuff that's high signal stuff, but it's certainly a lot more positive. I'm not gonna lie, I'm probably like Pareto efficiency 80-20, where I spend like 80% of my time on Twitter and 20% on Nostr, and I should make it.
Same here.
I should switch. Like we should be the other way around. We should be 80% on Nostr and 20% on Twitter.
Yeah. And for me, I think the thing that really just keeps me from Nostr is just right now, it's just Bitcoiners. Like I like to follow, YouTubers and all these other creators and individuals on Twitter as well. And that'll all come to Nostr in time, but we have to do the marketing push on it. But yeah, without any further commentary, because we've gone over so many great things. I really liked today's show. I felt good about this.
It was good.
More focused.
It was good. That CPI stuff. How many Canadians are talking about that? Like,
not talking, enough, man.
Not enough. Like we're not talking about this. The average Canadian Bitcoiner knows more about American CPI than they know about Canadian CPI. I guarantee.
Yeah, well, that's all Canadians. Like we know more about American politics than our own a lot of the time too. So. Or I'm just speaking for myself. But anyways, so much more to get into as always every single week. But thanks so much for tuning in, everyone. Really appreciate it. And we'll do one more next week. And I don't know, maybe one the week after. I'll see. But beyond that, I will be traveling the globe. We'll try and make some fun stuff for you. Hopefully, no Bitcoin ETF gets approved in the meantime. But yeah, take care, stay sovereign, and we'll catch you all next week. Peace.